From the morning reading, Advanced Micro and Hasbro do the hustle. Fastenal and Tesla speed higher. The SPX pauses. Breadth weakened compared to the prior session as decliners led 1845 to 1169 on the New York Stock Exchange and led 1812 to 1050 on the NASDAQ. Negative momentum is picking up under the surface, even as the major stock indices hit all-time highs or were close to them on Friday. Stocks in the S&P 1500 index weren't showing as much enthusiasm. Gauged by the relative strength index, an abnormally low number of stocks have seen extreme positive momentum, and the rising number are seeing extreme negative momentum. Indecision after a buying thrust. Friday's surge at the open left an unfilled gap as prices never neared Thursday's closing price during the day. Then on Monday, traders showed indecision with an inside day, a lower high and higher low than Friday's session. That has led to subpar returns even during this bull market. Hedge funds are highly geared to stocks. We looked at this on Thursday, and it's become even more extreme. On Thursday, the exposure index was at 50% and has since climbed to 68%, the third highest reading dating back to 2003. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:25 a.m. Mountain Time, and I'm recording this in preparation for the market day of February the 7th, 2017. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and bounce into the morning report, and we're going to move right along this morning. We are a little late getting started on this production, so we're going to abbreviate this a bit. On the four U.S. broad-based indices, we're uniformly up, and they're all up about 0.25%. Crude oil's down about 0.2%, as is the euro. Long bonds are down just below scratch, and gold is right at scratch. In overseas action, you have China and Hong Kong right at scratch. Japan down about 0.33%. Germany up about 0.5%. United Kingdom up about 0.2%. In macroeconomic reports for today in the United States of note, you have the JOLTS job openings and trade balance reports. And looking forward to tomorrow, we have the weekly crude oil inventories, a 10-year bond auction, and that looks to be about it. In terms of current volatility conditions, short-term VIX 10.17, skew still elevated 131.41, IV percentiles all extremely low, the S&P at a 10, Russell 7, NASDAQ 6, Dow 16. We did have one index come in with a standard deviation size move on a close-to-close basis yesterday, and that was the Russell with a -1 standard deviation size move. In terms of, let's go to the charts. And the S&P futures, we continue to see this action right up near the top of the range. And within this short-term bearish wedge, we'll see where that follows. Frankly, there does seem to be a lot of support underneath this, but this may be just pointing us to some exhaustion after the big moves that we've had in the intermediate term. In terms of the Dow, we see very much a sideways pattern and basically playing with double top, triple top kind of area right now. So bottom line is when you get 3 or more, you just simply look for similar highs and similar lows in these kinds of boxes, and anything within that is noise. So we're waiting for a breakout either to the top side or to the bottom side to be able to define the next move. Probabilities would have us break to the top side. A lot of support underneath, including the cloud. And, of course, the pattern leading into this was bullish. On the NASDAQ, continues to climb. And let's see here. Let's extend that. And this is a very steep curve that we've been following on the NASDAQ of late, and we'll see if that can continue much longer. Bottom line, though, we'll also have a similar highs here. Now, in last night's overnight session, we did have a new intraday high come in on the NASDAQ. So we are working in positive territory for the NASDAQ, and it continues to push up, even when the others are totally locked in a sideways pattern. Now, we continue to see these kind of incremental new highs, but that's, we shouldn't totally dismiss that. The bull markets are famous for incremental new highs and just kind of crawling up. At the same time, certainly we'd like to see more broad participation, and we've just seen narrow participation in the NASDAQ as well as these other indices. And of course, the NASDAQ seems to be making new highs at the same time. Nobody else seems to be going anywhere. And the Russell, indeed, totally locked in a sideways consolidation pattern going on multiple weeks now. In other markets, crude oil also sideways, nothing of note here. Gold has been moving. Gold did have a cloud breakout yesterday, and certainly that's of note, though right now it is backed up and entering back into the cloud with the current price action. But still, the bias is clearly to the bullish side here. And perhaps this is just based on, disbelief for everybody, and people continue to get kind of pushed over if they're trying to be short on this market. Bottom line is that gold is trending to the bullish side, and it's doing that at a time when very few other markets are doing anything. In fact, when we look at the dollar, now the dollar did have a big move last night, kind of interesting. I mean, we've had a pretty big move in the dollar, and while at the same time gold has had, a lesser move. Let's take a look at bonds. Bonds, still kind of mired in the sideways pattern, and in the cloud, very, very neutral. So not a lot of movement there. So you got a little bit of action on the NASDAQ with incremental new high thus far, and a little bit of movement on gold. Most of these other markets are pretty much locked in a sideways pattern. Our volatility continues to be exceptionally low. We're currently playing at about 11.2. Anything below 12 is extraordinarily low in historic terms. Okay, let's go ahead and get over to the daily report. We still have this as market phase 5. I think it probably should be a 3 or 4. We haven't quite gotten that signal yet on the indicator. At the very least, this intermediate term phase opinion is a very weak market phase 5. In terms of the 3 market timing tools, the first one coming to us from IBD, still in confirmed uptrend, that's bullish. The second one, GMI Index, a perfect 6 out of 6, that buy signal in place since 11:10, that's bullish. And the stock charts decision point scoreboard, still locked into these mixed signals on the short-term time frame and the long-term time frame. Overall consensus between all 3 signals is to the bull side. However, the stock charts decision point continues to indicate to us to expect small incremental highs and not very large lows would be the probabilities. Position sizing opinions both still coming in 100%. Intermediate term market posture has clarified somewhat. We do have bull on all 4 of the indices, with the S&P and the Dow at strong bull. NASDAQ has held on to the exceptionally strong bull standing throughout recent trading sessions, and the Russell has strengthened on its weak bull setting and is about to go into strong bull. Now, this is all against a neutral sentiment line, so the amount of runs to the top side or to the bottom side are not expected to be terribly persistent, and not much of a bias to either side. So this kind of gives you more evidence of these expectations of just kind of sideways chop kind of action. Hedge warning status remains 0+, normal with some elevated conditions. The 3 strategy opinions, no changes here. The only real warning coming to us from the option income strategies with this very low VIX and it's below the acceptable range for the initiation of new positions for novice traders. Anything below a 12 gives you that kind of danger zone of very low premiums compared to the amount of risk that's being taken on. So you need to take that into account. In terms of areas of specific warning, volatility-based area, mostly this is associated with very low volatility. We have a mild warning on the NASDAQ with a 5 distribution day count, and a little bit more serious warning on skew being up over 130. In the trend-based area, I thought I made a correction on that. This is now strong bull. So we have a weak warning here, and that's about it. Everything else is at least benign. In terms of the key intermarket risk aversion indicators, everything is in neutral. There's very, very little separation. I'm just going to call these neutral until we start to get some real angle and separation. They've been wrapped around each other and sideways for some period now. And until we get some clear indication, I'm just going to call these neutral. In terms of sentiment, fear and greed index, a little lower than the previous day, but still, in neutral to slightly elevated. Nothing terribly exciting at this point. In terms of sector specific, you see yesterday, overall day was a bit negative. Only 2 sectors were positive, tech and industrials, and they were only marginally so, with relatively neutral breadth. Healthcare also, and I should make a note, when we look at healthcare, it has been coming on, and we'll take a look down here. You look at healthcare, the 1 month now up 1%, the 5-day up 3% almost, and yesterday on a negative day in the market, basically just holding with scratch. So healthcare may be starting to make something of a more significant move. We'll look to see if we can get some consistency here for something more than other than just a bear flag in that overall intermediate term trend. So I think that's probably enough for today. Again, we're going to be abbreviated today. We're just going to get this to published since we're a bit late. I'm going to roll through these slides. If you see something of interest, just hit the pause button. We'll get to the disclaimers. Disclaimers as always, if you see something of interest, just hit the pause button here and make sure you have enough time to read everything. Also, the hyperlink down here at the bottom for the full set of disclosures. Should be back here for tomorrow's market preview. In the meantime, manage that risk and go out there and learn something each and every trading day. Good trading.